Okay, everyone, we're going to get started. Thank you so much for joining us today for our presentation of why Broad Financial offers the best self-directed IRA option. I am Brian Blasier. I'm the Director of Marketing at Broad Financial and Madison Trust. And today I'm going to walk you through why both of our sister companies are uniquely tied together so that we can offer you the best self-directed IRA option based on your needs and your investing goals instead of our own. And towards the end of the session, we will have a Q&A session with Jeff Astor, who is author of the book, The Ultimate Self-Directed IRA. And he will be able to field any questions that you have in the time that we have allotted. So please enter your questions in the Q&A box below or on the chat box on the right, and we will get to as many as we can. So, all right, let's get started. Give me 1 second here. Okay, so who is this webinar for? It's if you're worried about the stock market, or if you didn't know that you could diversify from a purely stock-based portfolio to a portfolio including alternative investments, including real estate, and that includes cryptocurrencies, promissory notes, private placements. The possibilities are really almost endless. This is for you if you didn't know the difference between a custodial or a checkbook IRA, and that's one of the main things that we want to focus on today, defining the difference between them and then finding out what is best for you based on your goals. If custodial companies had you believing that their option was the only option, and that's a myth that we're going to expose here today. If you have a custodian, you've been getting killed with fees. A lot of the custodians out there, they offer fees that are asset-based. So essentially, the more you have with them, the more fees they cost you, and essentially you get penalized for growth. All Broad Financial and Madison Trust fees are flat. So we don't have fees that are tiered like that based on the amount you have with us. This is for you if you have a custodian and they slow you down, making you approve deals with them first. This is the beauty of the checkbook plan, where it puts your retirement funds into your hands, and you don't have to go through a custodian to make your investments. And then finally, this is for you if you have a custodian and they have terrible customer support. As we'll discuss, Broad Financial and Madison Trust are both built on the foundation that we want to deliver customer support first. That's our primary goal, and that is the one that we are continuing to strive for every day with our current clients and hopefully future ones as well. So, just to wrap it up and to get started, an overview. This is for you if you want to learn how to take full control of your retirement account, self-direct it where you want, when you want, with low predictable fees and great support. So, who are we? Our why. Our story began because the founders' parents lost 40% of their Wall Street retirement portfolio in 2008. And once it hit home, they took action. Our founding partners, they looked at each other and they said, this is crazy. The housing crisis is going down, and our stocks, bonds, and mutual funds, our parents' portfolio are all dipping. Why is it all tied into this? Our expertise is in real estate. Why can't we move our retirement monies into something that we are much more adept in investing in order to really hedge against the fluctuations in the stock market? So out of that came Broad Financial, where they were offering checkbook IRA LLCs to people so they could do just that. 5 years later, in the first 5 years that Broad Financial was around, we were using a third-party custodian to serve as the self-directed IRA custodian for Broad Financial accounts. They're still, a company out there. We don't want to slander them or mention them by name. But what our founders saw was that the quality of support that company was giving our clients was not up to the level that we were offering our own clients at Broad Financial. So our founding partners looked at each other and they said, what we need to do is create our own trust company, our own self-directed IRA custodian, so we can offer the same level of support that we offer Broad Financial clients as the self-directed IRA custodian as well. And that's where that's where Madison Trust was born. So now we are sister companies. We share an office space. Madison Trust's main headquarters is in South Dakota. They're regulated by the South Dakota Division of Banking, but their administrative offices are here in Northern New Jersey with Broad Financial. So we work very closely with Madison Trust. And when you get one, you get the other. Our experience. We have 10 years in the self-directed IRA industry, with over 10,000 clients in all 50 states. We have A+ customer support, and we have great reviews on all of the popular review platforms. So I encourage you to go look at our reviews on Google, Yelp, Facebook, BBB, all the places where a real customer can come in and leave a review. I encourage you to check those out because we have many satisfied customers who are leaving us quality reviews every day. And our sister company, which is Madison Trust, has $1.5 billion in assets. Now, how does this apply to you? Many people are looking for a company that they can trust that would treat their money as if it was their own parents' money, much like our founders were in 2008. Many people feel stuck with their current IRA, and when the market fluctuates, they feel helpless. Many people don't know that they can make their retirement money work in alternative investments. It's really just a great unknown that you can move it into an alternative asset such as real estate. And many people don't know that alternative assets can accelerate their growth and truly diversify their portfolio. A financial planner is going to tell you this is how you diversify your portfolio with stocks and bonds and going into different sectors. But to really truly diversify, you need to keep some of that, keep some of your savings in there, but then also diversify into alternative assets, such as real estate, and then you are truly diversified. So what is a self-directed IRA? A self-directed IRA allows investors to diversify their retirement portfolio into a wide variety of asset classes, which are unavailable to them in standard IRAs. Traditional brokerages, now those are the Fidelities, the Schwabs, the Vanguards, the TD Ameritrades, they generally only hold publicly traded assets, which are stocks, bonds, and mutual funds, while self-directed IRAs hold alternative investments such as real estate, cryptocurrencies, startup companies, notes, loans. As we'll get into, the possibilities are almost endless. Now, you may also be thinking, I never knew that an IRA can purchase real estate. Does the IRS actually allow this? Well, here's the thing. The IRS does not outline what investments may be held with an IRA. It specifies the investments which may not be held within retirement plans, and that's really just two things for IRAs. An IRA is forbidden from investing in life insurance or collectibles. Now, collectibles is a wide array of things, but you could think of it as artwork, rugs, antiques, metals. You could even get into, baseball cards, antique cards, classic cars, things like that. You're forbidden from investing in wines. You're forbidden from investing in with your IRA. But pretty much everything else is fair game because the IRS has not forbidden it. Now, you might be asking yourself also, why have I never heard of this concept before? I was always under the impression that IRA investments are limited to stocks, bonds, and mutual funds, like we mentioned before. So most IRAs are held at traditional brokerage houses. Now, like I said, Fidelities, the Schwabs, the TD Ameritrades, the Vanguards, and they offer publicly traded assets such as your stocks, bonds, mutual funds, ETFs, REITs, and those brokerage houses, they do not accommodate alternative investments due to the administrative burden that's involved for them to do so, and the loss of commission from products. The real bottom line is that it's not in their best interest for them to let you know that you are allowed to do this. So they don't restrict the knowledge, but they just don't make it readily out there. And they also offer their own self-directed IRAs, which are not a real self-directed IRA. Their self-directed IRAs still only deal with stocks, bonds, and mutual funds. A true self-directed IRA is one that you can move off of Wall Street into a real physical asset like real estate, like a real estate investment such as housing, condominiums, land, not something like a real estate ETF or a real estate REIT. So how long does the process take? The process generally takes 2 to 3 weeks. Now, the contributing factors are the speed of the current IRA custodian or 401k plan administrator where your funds are currently at in processing the transfer or rollover request. This is the biggest unknown to us because an administrator can take any amount of time that they want to actually recognize the request and then execute the request. So that's why we give it about a 2 to 3 week time frame, because it's really up to how quickly the plan administrator wants to react and actually execute the rollover. There's opting for standard processing and expedited processing. We do offer an expedited option, which could shave 2 to 3 days off of the processing time, and funding and investing via check versus a wire. Obviously, if you go, with a wire, that's going to be a couple of days quicker than mailing in a check. So, what is the process of setting up a checkbook IRA? So here's how we create your checkbook IRA LLC in 6 easy steps. And a little humble brag here is that when I took over as the director of marketing at Broad Financial, one of the first things I did was I sent out surveys to people who had recently become customers, people who signed up less than a month ago. And I wanted to see, what was the biggest barrier for them? What was the thing that was, holding them back the most to actually taking the jump to opening up a checkbook IRA? And the answer by far that I saw the most was, I just didn't know what was going to happen next. And that makes sense. It seems like it's complicated, but it's really not. So what I did was I went in and put it on our website, and it's outlined here as well, the 6 steps that it takes for us to actually create an IRA LLC for you. So step 1, you fill out our 1-page application. Very simple. After that, we'll email you a welcome package with forms and full instructions of what to do next. It has everything that you need to do, which is not that much. Broad Financial will create the IRA LLC, taking care of all the paperwork. Broad Financial creates the IRA for you on your behalf and drafts the LLC for you on your behalf and drafts all articles of organization, operating agreements, EIN numbers, everything like that. Simultaneously, we'll connect you with our custodian, our sister company, Madison Trust. You'll tell them where your funds are, how much you'd like to roll over, if you'd like to expedite the process, etc. At that step, you're creating your self-directed IRA and you're asking Madison Trust to roll over the funds. After that, Broad Financial will mail your binder with all necessary documents. That's your operating agreement, EIN number, etc. You'll then open the LLC checking account at a bank of your choice. This could be any bank that you choose. It's any bank that will open up a checking account for a business. And then finally, Madison Trust will transfer your funds to your LLC's checking account. And that's the last step. Once that's in there, then you have complete control of your retirement funds. You can then take those funds and invest them where you see fit. You have complete control. You don't have to go through a custodian to do so. You are in control. You can make the investments. And that's it. In 2 to 3 weeks, you'll have a bank account that you are in complete control of. I promise that might be the last time I say control, but maybe not. And it will work just like a regular bank account, but since it's under the umbrella of an IRA, all of your profits will be tax sheltered. You can do this with a traditional IRA or a Roth IRA. So if it's a traditional IRA, your gains will be tax sheltered and you will not pay capital gains tax. You will only pay a tax when you do take a distribution after you're the age of 59 and a half. And if it's a Roth, all the profits you make are tax-free because you've already paid the taxes beforehand. But the beauty and the real secret of a Roth plan is that your principal and your profit are both not taxed going forward, which is the huge draw of the Roth. So the bottom line, Broad Financial will create an IRS-compliant IRA LLC that allows you to hold your retirement money at a bank of your choice. When you do this, you regain control. I lied about my promise about saying control. So you want to take your retirement to another level of flexibility, control, and power. I really wish I didn't put my foot on my mouth while saying I wasn't going to say control. Okay, so now this is what we wanted to talk about. This is a comparison of a custodial and a checkbook plan. So let's just go through it one by one. As you see, whether you on the left, if the blue one is a custodial IRA, it's a traditional self-directed IRA, and on the right, it's a checkbook IRA, or also called an IRA LLC or a self-directed IRA with checkbook control. Now, Madison Trust Company serves as the custodian for both. When you do a custodial plan, Madison's handling everything for you. You're instructing them where you want to invest, and they're doing it for you. With a checkbook plan, even though you're the one who's doing the investments yourself, every IRA needs a custodian. So essentially what's happening is Broad Financial is creating the IRA LLC for you. And what Broad Financial is doing is creating an LLC that has special language in it that allows it to both hold and invest with retirement money. Then you're opening up a self-directed IRA with Madison Trust, who's serving as a custodian. But in this space, they're serving as a passive custodian, because then what you're telling Madison Trust to do is to roll over the funds into the checking account that Broad Financial in the LLC that Broad Financial created for you. So Madison Trust is hands off, but when it comes to tax reporting, the IRS is going to see that you do have a self-directed IRA with Madison Trust, but it's actually only invested into one particular asset, and that asset is the LLC that Broad Financial created for you. Everything else that you're investing in with your LLC, You don't have to write back to the IRS. They're not concerned with that. All they're concerned about is, the ballpark value of what the LLC is worth that you're invested with. So once a year, you come back, you tell Madison Trust, this is what my LLC is worth, and Madison Trust will write back to the IRS on your behalf. And of course, they do that for the custodial plan as well. So transaction fees. With the custodial plan, you will be paying per transaction. So every time that you want to send money out, that's going to be a fee from the custodial plan. For a checkbook control plan, there is no fees. Now, there are no asset-based fees as well. So these would be the custodial fee that Madison Trust charges. And since Madison Trust is serving as your custodian for the checkbook control plan as well, but we have no asset-based fees. So whether you have $500 with us or you have $500 billion with us, it's the same flat fee that you're charging. We both offer lifetime free customer support. So whenever you come on board, you can call either of our services and we'll help you out. We offer both traditional and Roth IRAs. For the checkbook control plan, that's when you're going to have an LLC created for you with a custodian. You don't need one because Madison is executing the trades for you. Real-time access to your funds. Again, with a custodial plan, Madison is holding the funds. In the checkbook plan, you have control with them. How you make investments, with the custodial plan, you need to contact Madison to do so. With the checkbook control plan, you're the one who's in control. You're writing the check, doing the debit card or wire transaction, and they're both available in all 50 states. Now, really what it comes down to is what we would recommend is if we would recommend going with the custodial plan if you were doing a passive investment. So that's one where it's like, say, there's not many transactions that are taking place. Say you're doing a one-time lump sum investment into a private placement or into a fund, something like that. We'd recommend going the custodial route. Why? It's cheaper up front to create the account. And then you're not going to have that many transactions, so you're not going to be bogged down with the transaction fees. Now, if you're doing something like, investing in real estate, like a rental property, where you're going to have to be making payments, on a monthly basis, that's what we would recommend going with the checkbook plan, because it is more expensive to create the checkbook plan because you have to pay for the cost of creating the LLC up front. But what you'll find is if you are doing a lot of maintenance or if you're doing a lot of transactions with your self-directed IRA, you're not getting any transaction fees with the checkbook plan. So in the long run, for those really investment or the transaction heavy investments that you plan to make, the checkbook control is more cost effective. So that's the route that we recommend for you. And that's what it's all about, helping you, discovering which plan is right for you. And if the plan is right for you, and if it's right for you, which plan is right for you, helping you better understand how it works and helping you take advantage of an amazing opportunity you may not have known existed. It's easy to find out more. You could set up time with a self-directed IRA specialist that we have here at Broad Financial. It'll only take you a few minutes of your time to learn now, so you can call now. The number is 800-395-5200. And we also recommend that you send your questions in now. So now we're going to be joined by Jeff Astor, author of the Ultimate Self-Directed IRA. And I'm going to retreat to our QA page here, and I'm going to feed Jeff the questions. So I appreciate you guys staying on with me, and just bear with us for one moment, and we'll get the Q&A started.
Hey everybody, Brian, you there?
Yep, can you hear me?
Yeah, I can't see me on the screen though. Is there supposed to be a picture here?
No, I don't think so. But I can see you. You look good.
Okay. By the way, everybody, I'm not sure if Brian told you, but this is a shameless self-promotion. This is the book, The Ultimate Self-Directed IRA. So it's an easy read, 2 hours or less. A lot of people, have told me that they found it, a real lifesaver. It really gave them an overview, and in a couple hours they got clarity on what these things are. And then, as I always say, if you have other questions, you can always ask it to the horse's mouth. I'm very happy to talk about it. But anyway, today we're here. I listened to a little bit of Brian's presentation. It was fantastic. And I'm here to answer your questions, all types of questions. Nothing is too easy, nothing's too hard. You know, I even got a question last time, I think, on the Clemson LSU game or something like that. We'll leave sports out of it, but if it's on anything related to the topic of financial and then IRAs, IRAs and retirement, please feel free to do it. Apparently, there are some questions already submitted. Brian, whenever you're ready.
Okay, so Kenneth asks, can I take a loan out against the IRA if I open up a checkbook IRA to use as a down payment?
So there's a chapter in the book about leveraging. You can, but there's a qualification. You can't get a normal loan. A normal loan means that the lender, the bank, has recourse to your personal assets. When you involve IRA money, the IRS tries to protect it, and they only allow you to get a non-recourse loan. That's a loan where the lender has no recourse to your personal assets should you default. Generally speaking, most banks will shy away from that. They won't do it. There are banks that do, and there are some national lenders that if you call us and contact us, we can get you the names of some people who have helped our clients in the past, and sometimes it works out really nicely. Typically, a national lender will want maybe 50% down instead of 10 or 20%. Their interest rates typically are not going to be terrible, maybe a point or so higher than the norm, but it varies from person to person, and you can always find hard money lenders and people that are outside the box that may be giving you different deals. But the bottom line is that you can only get a non-recourse loan when you involve IRA money, and that means it's a little bit more challenging to leverage a property, but you can do it.
Okay, Olga asks, is a self-directed IRA exposed to UBIT?
Yes, Olga. UBIT is unrelated business income tax, and every IRA and 401k is subject to it, even self-directed ones. What is that specifically? UBIT means that you're using your IRA in an active way, it's an active business. So the classic case is real estate. When you buy and hold a property for 12 months or more, you put it out rental, that's not active. That's a passive income. When you start flipping houses, you can run into UBIT. Now the IRS actually is very vague, surprise, about the wording. They say frequent. If you flip frequently, what does frequent mean? So frequent can mean as little as 2, maybe it's 3 or 4 or 5. We usually recommend people consider the second one a UBIT case, but some people have had attorneys and they've told me, and attorneys told them that you can do 4 or 5 or 3 or 4. You need someone to back you up if you're not doing it. So again, if you ask us, we're going to tell you conservatively 2 is frequent because that's the minimum. You may be able to get away with more, but the bottom line is you are subject to UBIT. It's something to be aware of if you're going to be in the house flipping business.
Okay, Jerry asks, hold on, just trying to. Oh, hold on, so Franklin asks, is a self-directed IRA the best option when planning to invest in real estate, stocks, and other investments?
Well, self-directed IRA in our term, I heard you talking about a self-directed IRA is when a Wall Street brokerage looks at self-directed, they mean all types of stocks, bonds, and mutual funds. To us, it's a very tiny world. For us, it's the whole world outside stocks, bonds, and mutual funds. If you want to go into actual real estate, you can't do it on Fidelity and Schwab. They don't do this. You need a truly self-directed plan like ours to do so. So yes, if you want to go off of Wall Street into real estate or the whole world of alternative investments, it's not only a self-directed IRA, it's not only the best way to do it, it's the only way to do it.
Okay, so Gil asks, it's my understanding if your self-directed IRA is in real estate that you cannot occupy that property as a second or a vacation home. Is that correct?
You can't occupy it in any way. I mean, you can't occupy it for personal use. You can go to an IRA-owned property and collect rent, talk to the manager, even supervise contractors. That's all permissible. But you cannot make personal use of it. I always tell the story of the guy in the East Coast who wanted to use an IRA to buy a ski lodge out in Colorado. And it was a nice, money maker, but he insisted upon going there 1 weekend per year to ski. So that's a no-no. That's personal use. Even to sleep over one night in a lodge would have been a prohibited transaction. So yeah, so it doesn't matter if it's a first, second home, third home, 10th home, you cannot make personal use of an IRA-owned property.
Okay, Franklin asked a second question. I guess I didn't describe this good enough. Are you guys brokers for Madison Trust Company?
The Madison Trust is the custodian. As Brian mentioned, every IRA needs a custodian. Custodian is what the IRS trusts to give them a glimpse and and a pulse of what's going on in an individual's IRA. The Madison Trust is a custodian. We, Broad Financial, we're what's called a facilitator. We're actually the same company. We have the same ownership. We're in the same building, but we work hand in glove. It's necessary to have a company that sets up the IRA LLC, which is Broad Financial, which is the basic body of the IRA, of the self-directed IRA, and it's necessary to have a custodian who will move the funds into the IRA and who will report to the IRS once a year. We're not a broker for Madison Trust. We're a sister company that works hand in glove.
Okay, Jeff. Jeff has a question. With the checkbook.
Anyone named Jeff should get to the front of the line.
And it's not the Jeff like Geoff. It's the real Jeff.
The real Jeff.
So with the checkbook plan, are there restrictions as to what you can invest in? Meaning, I have a small business already that I would like to invest in to expand it. Primarily, I'd like to buy or build a warehouse for the business and possibly other tenants. Thoughts?
So he wants to buy, he has a business and he wants to use his IRA to add a warehouse to it?
Yeah.
It sounds like, you need to talk to me and talk about the specifics, but that sounds like a prohibited transaction. The rule is you can't self-deal. You can't use your IRA to invest in a property you own or in a business you own. If you want to build a warehouse on the premises of your existing business, that's clearly a no. In theory, if you wanted to build a warehouse off the premises, buy real estate, use your IRA, buy the real estate, and put a warehouse there, that would be good if you want to use that warehouse for things that don't go back to your personal business. But if you are building it, the warehouse to store and to help your personal business, that would be a conflict of interest. You need what they call an arm's length transaction, and that to me doesn't sound like it would be.
Okay. We have a question from an anonymous attendee. And this is a new one. This is a competitor that I've never heard of before. Why choose you versus iDirect Law or another company?
Okay, firstly, Brian, we want to turn the page to maybe where there's the phone number, the screen?
Yes.
It says the Q&A. Well, I don't want to speak specifically for other companies. Let me tell you some of the pitfalls and the things that people don't realize out there. When you do your research, first thing to know, it is very important to have a company that's reputable, because people don't realize they look for plans and cheap plans. And the reality is that you can really get stuck, because people don't realize that how important it is that once you start using the plan, then you first have questions, and very important questions, because if you don't get it right, if you don't know what you're doing, if you ask a question and no one knows what you're talking about, it doesn't answer your questions, you could lose all the tax shelter status of your IRA. That could be hundreds of thousands of dollars. You can be paying tens of thousands, whatever it is. So it's foolish and silly to go after a company, to sign up with a company that has no track record. So first thing, you need a track record. And I need to know that track record should be in the form of at least an A+ with the Better Business Bureau and 4.9s and 5.0s from all the popular different rating companies. But more than that, you really want actual testimonials, people that have said, I used your company and I think the company is great. Don't trust this company has a rating on Better Business Bureau, even if they're accredited. So if they're not, that's bad. And if they are, they have 4 ratings. That shows me that's not a real company. It's a small company, if it's a company at all. A lot of times it's a guy in a basement. But the bottom line is you need a big company with a big reputation and lots of testimonials. Number 2 is that very often a lawyer will open up, an individual or a small law firm will open up one of these things. And what they're really hoping to do is to get your business in consulting. So they might start say, here's a self-directed IRA. We've created the LLC. Some of these lawyers don't necessarily know how to do it. It's not a classic typical. It's a subset of a law called ERISA. But assuming they are, it's rare that you're going to get an actual small lawyer firm offering you free lifetime, toll-free, totally free lifetime customer support of even the stickiest legal questions. I had a fellow call me up. He said it sounded like he saved a few dollars and he got one of this law firm and everything was good. And then he called up and they had some questions. They said, sure, $500 an hour. So there goes the savings right out the window. In addition, many of these law firms really are not as well versed in it. A company like us, Broad Financial, we've done this for 11 years now. We're in our 11th year. we've got 10,000 plus clients, and this is all we do. This is our specialty. And if in fact our in-house support doesn't know of, gets the rare question that they can't answer, we have access to 2 of the leading ERISA firms, attorneys that specialize. So you really, what I'm saying is you need to emphasize that there's a company, because chances are you're going to be asking questions that could be crucial questions to your financial future. You want a reliable company that has a proven track record, that's the ratings and the testimonials, and you want to know that they're giving you lifetime toll-free, totally free support, and they're a good company that's proven that they can do that. Not 1 year of support. 1 year of support doesn't help you because you can have a big question in year 2. Not $200 an hour, $300, $0 an hour for support. So again, I'm not going to talk about specifics. I know that when Broad Financial, we are extremely customer oriented, and our track record proves it. And it's made a big difference in people's lives. They've told me, and they've told me when they've made mistakes and gone to others that look good on the outside, but they didn't do the research. They didn't realize how important support is, and having it free and accessible. It's almost the most important thing they should have been looking for.
Okay, we do have a question about losses, and I think it's an important point because we're not like another IRA company that's guaranteeing that you're going to get a huge growth or profit from this, because what you're doing is we're putting the IRA in your hand. We're putting the investments in your hand, and sometimes they don't work out, but it's really based on what your judgment is. But Vincent asks, if I open a checkbook IRA for $50K to purchase a rental property and the deal turns bad and I lose the $50K, and am I subject to penalties?
No, you're free to lose all the money you want. I've heard many people making lots of money, but it's an investment. It's your investment. You don't get penalized for losing it. You lose your IRA money. You lose that for that portion of your retirement. But there's no penalty for that.
Okay. Derek asks. He says, Jeff, I have an employee-sponsored fund with little rollover. Can you help me? I want to purchase some property and then refinance it for a building project. I was thinking about opening an LLC for ownership and then sell the property through the LLC.
I was just talking to Derek, or maybe that was a question. It doesn't sound like a good situation there, Derek. You need, if you don't have the money, as I said earlier, you'll need to get a non-recourse loan if you want to leverage it. Leveraging means you're probably going to need 50% down, and it's going to be harder to find a non-recourse lender, and it's going to be a higher interest rate. In addition, there's something called UDFI, unrelated debt finance income, in an IRA. I don't want to go into the details now, but it's a tax on the leveraged portion of your profits. It's a painful tax if that, in fact, is the case. I just was speaking to someone yesterday, though, who, despite that pain, it was still worth it for him because he was making enough of a profit. But it is something very important to consider. And having said all that, if monetarily it works out, it sounded like there was a case of self-dealing there. Once you get a property, if you can get a non-recourse loan, you can't then somehow have, again, you need the arm's length. You can't have any dealings with it, whether it to you or you to it. So, Derek, I encourage you to call. If it's the same Derek I spoke to, I think we'll talk tomorrow. If it's a different Derek, feel free to call in, give your specifics and detail to one of the representatives here, and we'll be happy to hear it out and see if it'll work. And if it doesn't, maybe to suggest you ways that could work. Because that's often what happens. People call up with one idea, and we say that doesn't work, but what about this? So we're happy to talk it out with you. But for the detailed analysis of your situation, call in and talk to one of the people there. There's the number, by the way, right on that.
Okay, I just everybody, we have a hard stop in 5 minutes, so we only have time for a couple more questions. One question came in from Paul, who asks, is it possible to buy a new property in which I split it up with my personal funds if I buy it with an IRA?
Well, yeah, that's actually chapter 12 of the book, Paul. It's called co-investing. Let's see here if we get the page. Yes, chapter 12, co-investing. Co-investing is done at the beginning, at the outset. If at the outset you take some money of your IRA, some personal money, you can co-invest them together into one property. So, for instance, you have a $100,000 property. You have $50,000 in your IRA, you have $50,000 in your savings account. You can take those two monies together and get the $100,000 property. You just have to be aware, for every dollar that comes back a profit, 50 cents is going into the IRA, tax sheltered, and 50 cents is going into your personal part, which is taxable. So you will have some taxes to pay on the personal part. it will be tax sheltered on the IRA part, but it is doable, and lots of people do it. Also call in for details. In the book, it talks about some of the details of how to do that. There are different ways you could structure it, but in concept, it's very doable and pretty common.
Derek confirmed that it is the Derek you were talking to and that he's going to call in tomorrow.
Okay, Derek, looking forward, Derek.
And, I think we can sign off with James, who's got a pretty good question here. How do I get started?
James, you see that number over there? I'm not sure where I'm from direction. Anyway, there's a number here on the screen, 800-395-5200. Give a call, ask for someone in sales, or go to the website, www.broadfinancial. Was this a planted question, Brian? This sounds like if I were a listener, I would think.
No, I usually don't like to give out last names, but this is not a planted question.
Okay.
But his name is James Smith.
Okay.
So it sounds like a planted name
It
and a
does
planted
sound
question.
like it. I wouldn't do. But anyway, the bottom line is.
But I was actually having a dialogue with James in the chat box, so that was his last question.
Okay. So www.broadfinancial.com. You've got information there, and you've got an application. You can sign up. If you're ready to go right there, sign up. If you want to talk to someone, 800-395-5200. We also have on our website in different places, different pages, you can put in your information, your phone, your name, your email, and someone will contact you, via phone or email. You let us know. Or you can call in. So that's three ways. You got a phone number, 800-395-5200. You've got a website, www.broadfinancial.com, and you've got one of our landing pages with the ability to put in your information and have some and request someone to contact you. Okay. How's that?
All right. I thank everyone for joining, and we will be in touch. If you have any more questions, you will get an email from Zoom after the webinar is concluded, and it'll have my email address on there. If you have any more questions, don't hesitate to email me, or like Jeff said, call 800-395-5200, and our staff will answer any other questions that you may have.